Well, good morning, friends. So, the topic of the day is space insurance in India. Space insurance in India. See, as the space industry rapidly expands, the once niche concept of space insurance is gaining increasing relevance now. Despite not being widely discussed, the burgeoning number of satellite launches and space missions is driving demand for insurance solutions tailored to the unique risks associated with the space activities. So, space insurance is not just about covering the cost of satellites. It encompasses a range of policies including launch insurance, in orbit coverage, and third party liability. As space becomes more accessible, the potential for collision, malfunctions, and space debris impacts rises, making comprehensive insurance more critical than ever. Earlier, it was reported that space insurance claims have totaled around $2 billion over the last 12 months, highlighting the high risk nature of this field. Now, the Indian insurance specialist companies like, say, Tata AIG is making significant strides in the space insurance sector. On May 13, Tata AIG announced the launch of satellite in orbit third party liability insurance covering bodily injury and property damage. The importance of this innovative product for the growing Indian space sector was highlighted because this innovative product caters to the growing needs of satellite manufacturers and operators in the Indian space sector, especially in the wake of recent solar storms that highlight the potential hazards faced by orbiting space aircraft. So, the necessity of robust insurance solutions for India's burgeoning space industry, which boasts 189 startups, is there. To address this need, insurers are offering customized space insurance aligned with international standards. The complex risks are mitigating through reinsurance partnership, ensuring coverage limits meet client requirements. The space insurance market faces several challenges, including the unpredictability of space missions and the high costs involved in underwriting policies. However, this also presents opportunities for innovation. So, the new insurance products of insurers with the increase in assets in low Earth orbits, the probability of collision is increasing by the day. Spacecraft satellite owners are concerned about the potential impact of loss of assets and associated revenues. So, with the introduction of new satellite in orbit third party liability insurance, this has solved a significant problem faced by the industry. The failure of high profile missions such as Bias 3 and the power issues affecting the first four SCS-03B M-power satellites have driven insurance rates up by as much as 100%. In the last quarter of 2023 compared to the same period in 2022. So, despite these challenges, industry collaborations and government initiatives are seen as crucial for ensuring coverage continuity and making the market more sustainable. Now, government initiatives and marketing or market evolutions are also there. See, the Indian government is also playing a pivotal role in fostering the space economy. The recent release of the norms, guidelines, and procedures for implementation of Indian Space Policy 2023 by INSPSCs mandates third-party liability insurance coverage for all licensed space objects in India. This regulatory framework is expected to bolster the domestic space insurance market. There are exciting opportunities for insurers like Tata IG, New India, because of these government initiatives. So the government initiatives fostering the space economy present exciting opportunities for insurers. While a limited claim history in space insurance exists, industry collaboration can ensure coverage continuity. So as the space industry continues to expand, the importance of specialized insurance solutions to safeguard these ventures cannot be overstated. New India Insurance Company is also one of the companies that is providing space insurance in India along with Bajaj Allianz. So with increasing space activity and a growing number of private players, the demand for comprehensive space insurance is set to rise, bringing new challenges and opportunities for insurers. While still in niche segment, the relevance of space insurance is rapidly growing, making it a critical component of the space economy's future. Now, India needs a limiting space liability and insurance policy. Why? Because space risk management is a critical aspect of space missions and has evolved as one of the most talked about topics in recent years, with the space sector becoming increasingly commercialized. So the space industry conversation is no longer about just exploring, but about the protection of national space assets. The first satellite insurance policy was placed with the Lloyds of London in 1965, which was designed to cover physical damages on pre-launch of Intelsat 1. But now the definition of damage is wider, with complex spacecraft, newly modernized payload facilities, and all types of risk mitigation options available. So the global scenario of insurance liability for satellite covers the risk in the pre-launch period to launch to in-orbit risk, with a new segment of in-ground insurance called spaceports. Interestingly, the coverage deals mostly with the physical damages. However, there is a lot of ambiguity on the risk case scenario of a cyber attack on space assets. So the Lloyd's Market Association recognized that there is an urgent need for the insurers and to space community at large to address the potential of a cyber attack on satellites, launch vehicles, on ground based control systems. ISRO too has acknowledged the criticality of the cyber attacks on the space assets. So, as per global policy, best practices in space insurance and liabilities are viewed as a key costs for the operations. Policies are framed suitably so that insurance liability and cost are not very taxing on the private sector and the startups, which would disrupt their commercial viability and stifle innovations. So the scenario in India today is different because the democratization of space, allowing private entities to participate in space activities, is a revolutionary step and represents a striking shift in the vision of the government for the space program. However, in the absence of a space policy or a space act, issues of space liability and insurance remains critical. At present, the liability for damage caused to third parties or to space assets is guided as per established United Nations Liability Conventions 1972. So the National Draft Space.com policy, which is in the final stage, requires the entities to insure themselves against any liability accruing from space operations in India or outside, and also holds private entities liable for any damage caused due to its space operations. So this navigation is to be fulfilled by providing a financial guarantee, insurance cover as determined by InSpace, who would evaluate the risk involved in the nature and operations of that space system in outer space. So the absence of a transparent risk assessment framework entails an open-ended liability, creating an ambiguous undertone to it. This would impose an undue burden on private entities, especially startups and MSMEs with limited financial capacity and resources. Now the important question is, under the French Space Operation Act 2008, there is a limitation period of 1 year from the damage caused by the entity, which would be compensated after a year of the damage caused. If in any case the compensation is not paid, the following would be passed on the government. What? Mandatory reciprocal waiver of liability, formation of national fund. All these provisions are already there. Now India needs to move swiftly and bring in the National Space Act and Space.com policy, which lay a facilitating risk management framework for the industry. So the policy must define the scope of damage to include all type of damages caused in all stages. For example, pre-launch, then launch, then in orbit. Means a smooth space traffic management framework must also take into account the insurers or actuaries' point of view as well. So the aforementioned international best practices, which has helped the private players in the space industry to flourish, must be studied and analyzed while framing the policies in India. Additionally, the insurance companies must collaborate with the space market to develop innovative solutions which allow the private sector to be more participative and encourage them to be risk takers. So the participation of the private sector enables the nation's aspirations for exponential growth in the space economy and needs to be supported by government interventions, including relief to the private segment from these liabilities and obligations. Major space economies use different practices to handle this matter in favor of the private companies and startups. When the world is moving towards limited liability and insurance costs for private entities, India cannot afford to work otherwise. So the government's approach to liability and insurance is hence very critical. And this is to be transparent. Thank you. Thank you very much.